Interestingly, we have new hints coming up from the Federal Reserve with regards to the balance sheet development. I've introduced the so-called Waller rule over the course of the week, and it relates to a speech given by Chris Waller, one of the members of the FOMC, just last week. He talked about whether the Federal Reserve will continue withdrawing liquidity from dollar markets via the so-called quantitative tightening program, now that the economic growth momentum is starting to wane. If we look at the link between dollar liquidity and ultimately the recession, then I would argue that a withdrawal of dollar liquidity is bad news for the economy overall, since it leads to less risk-taking, fewer projects, fewer investments as a consequence of the price of liquidity increasing. And therefore, there is a link between dollar liquidity and interest rates, first of all. If liquidity is withdrawn, it's typically a positive for interest rates and credit spreads. And therefore, ultimately, I think even though we're currently stuck in a discussion on whether this will end up in a soft landing, I think we should ultimately expect the recession to arrive in the second half of the year as a consequence of this liquidity withdrawal. And there is a tight link between interest rates and the economic activity in between 12 and 18 months after that increase in interest rates. And we are yet to see the worst part of that impulse on the economy from rising interest rates. The chart I show here is the relationship between 10 and 2-year bond yields in the US and the subsequent activity in the ISM manufacturing index. And as you can see from the light blue line, we will be faced with headwinds into the autumn as a consequence of already delivered rate hikes and credit spread widenings through 2022. So it's not a time to call off the recession. It's just a time to postpone it as a consequence of this liquidity injection short term. But ultimately, we will, sadly so, be hit by this recession, I think, towards the second half of the year in Q3 and Q4. And if we look at the link between the economic momentum, financial markets, and the purchasing manager indices that we use to gauge the economic momentum, then I would argue we receive new information week after week that the US growth momentum is still fading. We received an update on the so-called leading economic indicator from the conference board this week with a print of minus 1% month over month, which historically correlates with a level of in between 40 and 42.5 on the ISM manufacturing index just 1 to 2 months from now. So we still see downside in economic activity despite this liquidity injection short term that has helped markets rally through the beginning of the year. And if we go in details, the manufacturing sector will likely suffer still, but the worst of the momentum may be behind for the manufacturing sector. The manufacturing sector is already printing below 50 in most gauges of PMIs, which means that the sector is already contracting. So it is not even slowing anymore, it is outright contracting on a monthly basis. And if we use the leading economic index from the conference board and the yield curve 12 to 18 months ago, we get to a level of around 45 for the ISM manufacturing in the months ahead. So clearly in contractionary territory. The big issue for the economy is that we now also get to the conclusion that the service sector, 80% of the economy roughly, will also be hit by a contraction in, say, 3 months from now, roughly. I again use the leading economic index and the lagged consequence of interest rate hikes from 2022 as an indicator for the ISM service index, so the index with the sort of broadest exposure to the US economy. And here we get a conclusion relatively close to what we get in the manufacturing sector. We will see levels below 50 in the ISM service sector over the course of the spring, and that is ultimately what is called a contraction or a recession. So I think this recession is still likely to occur. The timing of the recession was postponed by this Chinese reopening, by the liquidity injection from the US Treasury. But ultimately, the recession is sadly still likely to hit the US economy, probably by early Q3 at the latest.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.